Welcome back to the BDSM show, where we're talking about all things budgeting, diversification, savings, and money management. As always, today is general advice only. This show is part of a larger project which we'll be talking about and have been talking about for a while. As I kick off, can anybody let me know if you guys can hear us okay? Just type it into the chat box on the right-hand side. So as I mentioned, we're working on this awesome B project, and the team are busy buzzing around it, and we'll be mentioning more of that when we're ready to deliver the proverbial honey. My name is Ivan, and since we started the show, we've had a cracking lineup of guests. Today, the trend continues. I'm joined by Rob Edgley, the MD of SelfWealth. Rob, welcome to the show.
Thanks, Ivan. It's a pleasure to be here. It's good to be in this forum.
It's been a while since we've spoken on a video call, but anyway, Rob jumped into the top job at ASX-listed SelfWealth about the same time as I did at Open Markets, and in a very short year, he's made it into a household brand name. When you think of trading, SelfWealth has really set the gold standard. Their passion is the client and the trader. Rob, your background is from what I like to call serious finance, investment banking, and global investment banking. How did you end up in personal finance?
Yeah, good question, Ivan. I guess my career, I've had two very separate careers. The first half is in investment banking, and a little bit of a story there. When I was younger, I actually did an exchange student for a year in Japan. So I from the time I was 16, I was able to speak Japanese. So I ended up working for National Westminster Bank, their investment banking arm, County NatWest, looking after all of their Japanese clients. And believe it or not, even though now I find myself up to my neck in the equities markets, I started off as a government bond salesperson. And so I was looking after those big Japanese life insurance companies when they were buying Australian government bonds back in the days when they were 15% interest rates, a little bit different to now. So I was involved in that. I ended up working in Sydney for 5 years, Tokyo for 5 years, London for 5 years, and then came back to Melbourne. And when I came back after that, nearly 20 years in investment banking, that's when I jumped over to the other side of the fence. I ended up as a non-executive director and a seed investor in a number of startups, and that the non-exec roles then became non-exec roles on listed companies. So the last 15 years or so, I've been a board member on 4 or 5 listed companies and a few private companies as well. And that has led me to joining the SelfWealth board 12 months or nearly 18 months ago now. And then taking over from Andrew Ward, the founder, last November, I stepped into his shoes, and then that was all made official in April. You're doing me a bit too much, giving me a bit too much credit there. And Andrew Ward put 7 years of his blood, sweat, and tears to get SelfWealth into the position we're into now, and I feel like I'm a custodian of his legacy in many ways.
Very humble of you, but I think I've seen some of the changes you've implemented, and obviously, there was that initial COVID spike where everyone was interested in trading as we all got locked down, but that trend has continued, and SelfWealth has been on an amazing journey from really, I think every month you're adding record numbers or close to record numbers of new clients. There's people talking about you guys all over the internet on forums, and that kind of hype wasn't there a year ago. What changed? Is it the market's different?
Yeah, I do think that there is a large a lot of new investors in the market. That's for sure. About 60%. Well, actually, SelfWealth has about 60,000 active traders at the moment, and 40,000 of those are either Zoomers or millennials. And we've so every one of those 40,000 is probably aged up to between 18 and let's say 39. And that's a lot of those are new. We certainly continue. After the COVID spike in March. Since that point, we've been averaging around about 1,000 new clients a week. That's driven our our client numbers from around the 20,000 mark at the end of last year up to 60,000. I think you know, why that continues is some of the disruption that firms like SelfWealth and open markets, for that matter, are contributing to the market. It's making people, not only new investors join up, but it's also making existing investors at other potentially the bank-backed online platforms search for a different experience, let's say, and that's certainly benefited us. I like to say, though, that you know, what I put a large part of this down to is the structural changes, and the biggest structural change I see is young people, when they want to get on in life and accrue and increase their wealth over time. It's a completely different ballgame now than say in my generation. In my generation, you saved first, and you saved through interest rate savings products, and all of those interest rate saving products have disappeared now. You saved for your house, you put your deposit on your house, you bought your house, and then after that, if you had surplus funds, you then started to invest. It's completely been turned on its head now. If you're a young person, a Zoomer or millennial, and you want to increase your wealth enough to buy that asset, you have to invest first, not saving anymore. The interest rate, you know, term deposit market doesn't exist. It exists to keep your money there. It's not going to grow your money. So that has pushed people into the market, and that continues to push people into the market. And SelfWealth's been lucky enough to be a beneficiary, because we had some very good technology and a very market leading position in terms of cost at the time, which has certainly benefited us greatly.
I think you're still very competitive on the cost side, and you know, you've been speaking about your platform. Obviously, you had massive success over March when even the ASX was at the brink of shutting down. You guys had, I think, uptime all the way through, with the exclusion, I think, of one blip, which was probably our fault. But you know, I think that speaks to us. Interestingly enough, potentially a little bit off piece, but you know, you've been obviously in the interest rate markets for such a long time. How do you think, and you know, and again, just under the general advice disclaimer, how do you think that, I mean, are we going to be sitting in a low interest rate environment for an extended period of time, or do you think that that's going to change?
Yeah, no, it's the Reserve Bank's giving really clear signals on that. It's staying here for a long time. I think their estimates is they won't increase interest rates for at least 3 years. So the structural changes, they're not, you know, SelfWealth saw it in terms of even investors into SelfWealth in March, April. There was a bit of skepticism about whether these conditions were here to stay, or was it just a fad? You know, the whole Robin Hood phenomenon. People are going to be trading. They'll lose money. They'll be gone soon. And I firmly believe that we're in a new normal, and that new normal means a number of things. The structural changes we just mentioned, but it also means you know, that the people involved in the market are probably a little bit more active. If you're a millennial, you're exposed. You know, digitization of financial markets, COVID has probably accelerated that. You know, that's a trend that's been going on for 15, 20 years, but it's been accelerated maybe 4 or 5 years in 6 months. So if you're online all day, which most people are these days, you're influenced by webinars, such as we're doing now, by podcasts, by social media. There's no doubt you're going to trade more than previous generations who might have been talking at the barbecue about the BHP stock that they bought a few months back. So there's things that are going to, those structural changes, and interest rate is one of them. It's going to stay. We actually at SelfWealth, we see people, a trend amongst their ANZ bank account that they have at SelfWealth. Previously, pre-COVID, you would have seen people continually moving their money in and out of their trading account. That doesn't happen as much these days. People will sit with, because you're not getting that extra interest-bearing return that you might have by switching back to an interest-bearing deposit. and you're missing the opportunity cost of having your money in your account ready to go and take advantage of a certain situation. So people are treating trading accounts simply like a bank account now.
Yeah, and hopefully, for those of us that use, we'll call them challenger brokerage platforms, although I think that I don't know if I can even call you in that anymore, because obviously you're becoming quite dominant. But hopefully open banking makes it a lot easier and a lot more instant to transfer funds around to really benefit further and not have that. We're running a poll at the moment. Is the cost of brokerage something that you would factor in when you're trading? So it's on the right-hand side. And also, if you do have any questions for Rob, type them into the chat. So you've seen this change, this structural COVID change that we'll call it COVID influence change with people seeking more digital. What kind of stocks are people looking at, and are you seeing a trend towards ETFs as well?
Yeah, definitely. By nature of our demographic, 40,000 of 60,000 clients in that age group, we do tend to see a very strong trend towards ETFs. At the moment, 32% of all HIN-based holdings on our platform, and we have about 3.5 billion of HIN-based holdings on the platform at the moment. 32% of those are ETFs at the moment, 68% shares.
Wow.
So that's that gives you an idea. Now, you find the statistics around holdings as opposed to volume that's traded can be quite different. If you're looking at the top 10 holdings on our platform, 4 of those top 10s are ETFs. They're the usual Vanguard suspects that are most popular in the market. And from a holding point, 4 of those top 10s. But the number one holding is still a traditional stock, CSL. CSL is still number one held stock on the SelfWealth platform. Then you follow, the banks are still up there as well in the top 10. And that's because you've got long-term portfolios, obviously, and older demographic investors as well, with perhaps larger positions. But when you go through to the, you're not talking about holdings, but you're talking about in September, what was the most traded stocks? Well, then you're coming back to the Afterpays, the Sezzles, I think BrainChip made it into the top 10 last month as well. But you're also getting like you might have the beta shares bear ETF. So people getting concerned around the US election, we've had a great run in the market over the last 4 or 5 months since the crash in March. People starting to hedge their portfolios by participating in those bear ETFs. So much more, I guess, tech stock heavy when you're talking about the amount of trading in a particular month, as opposed to the holdings. Some of the other trends, Ivan, which
it's very interesting actually that change, the very clear distinction between the trading of tech stocks versus the holdings, which is still a lot more traditional. Yeah. Sorry to interrupt. Sorry, you're saying now the other trend.
A couple of other little trends, and you know this very well. But the average size, as we've added more and more millennials to our client base, the average size of our transactions have reduced quite dramatically. From for the last 2 years pre-COVID, the average size was about $17,000 per trade, and that's come right down to around $10,000. And that just shows more people with smaller amounts of money and putting money to work on a regular basis, but in smaller amounts.
Yeah, interestingly enough, we've noticed that across some of our clients and internally through us as well, is that there is that move towards passive investing, where people put away their salary and every month they'll buy an ETF. So which is interesting. It shows the level of maturity across a younger audience that potentially wasn't there. I remember you mentioning a couple of months ago when we were talking that your daughter, actually you also did mention that she was very concerned with the name. So, in case she's watching, it is not as concerning as it sounds. We are talking money. But you mentioned that she became a SelfWealth client. And how different is that demographic to say, you mentioned most of your clients are in that younger demographic. How is the profile of that client different to maybe your traditional I don't want to move away from ComSec type client, like my dad, for example?
Yeah. I think it's in the way you mentioned, Ivan. They and I've got kids that range from 20 through to 26, and they all have their SelfWealth account. We sit around and talk about, as a term deposit comes up for renewal, no, we're not going to do that. We're going to put it into the market. What are we going to do about that? So I'm finding it great, or such engagement with my kids at that age, in that millennial Zoomer and millennial age bracket. But they're by and by, and this is our data shows this as well. More than 70% of our trades over the number of total trades over the last X amount of months have been on the buy side. So, yes, there are people trading madly. Yes, they are buying and selling in the same day. People doing, 10, 20, 30 trades a day. Those people are obviously there on our platforms, but the majority of people are buy and hold. They are putting money in as they get some money available, whether it be a term deposit comes up for renewal, or as you say, a few $100s out of the fortnightly wage check goes into the market. And it's to me, that's quite sensible investing. And I think some of the media that we see, obviously they like to sensationalize things. I think by and large, the younger demographic who are investing, they're getting a bit of a bum rap at the moment. They're not investing irresponsibly. As we just said, 32% in ETFs, diversified portfolios. What is more responsible, a diversified ETF portfolio, or someone my age with 5 stocks in their portfolio, 3 of which are banks, and
2 mining.
That's right. So I'd argue that our millennial investors are by and large doing the right thing.
So the first poll we ran was very non-controversial, which was, how important is brokerage to you? 100% said that it's important. The lower the cost of transactions. This one is a little bit more controversial. Would a flat brokerage fee make you trade more often? And we started initially with no, but 77% have said yes, and 22% have said no so far. Interestingly enough, so just on that, I think that it was the talk of the town when Andrew Ward first launched $9.50 flat rate, and you explained since then in conversations why you decided to do that, and which is very, the way that the ASX runs or charges, then in turn means that how the cost of risk capital in there, what impacts ultimately clearers to then doing that. How much of a change, like what drove the $9.50 flat fee? And clearly investors love it. It opens their doors to so much. But how did that come about?
And not only how did it come about, Ivan, but credit to Andrew. He did that like 3.5 years ago. It wasn't something that we just thought of early this year or something like that. He did it 3.5 years. Now he worked in the wealth management industry, and he worked for one of the banks, which we won't name today, but in that wealth management industry, and he was really had a strong view that they were charging too much money. They were charging high commissions and fees, and so when he's SelfWealth pre-online broker days, when it was a peer-to-peer investment community, when they found that community found the stocks they wanted to buy, and then they decided to go out, they need to go and buy them somewhere. He was determined he opened the online broking arm, and he was determined to make that flat fee, no commission, and no bank fees either. So SelfWealth absorbs the bank fees on all of our clients' monthly bank fees on their accounts as well. So that was he was certainly a disruptor in that regard. And it struck a chord, and that's our business model. By the same token, our business model, we can't have institutional clients on our platform doing trades for 20, 30, 40 million dollars at a pop. That's our business model's not set up for that. It is set up for smaller and many larger volume of smaller transactions. And the flat fee was very, very topical in that regard.
Yeah, I mean, it was definitely revolutionary. Everyone is talking about going down that path. Venki asked a question: is there a chance that zero brokerage platforms would come to Australia, like Robinhood in US? What are your thoughts on that, Rob?
Yeah, this is the $99 million question. This one, look, as you mentioned before, we've got structural impediments to that in Australia with the way that the ASX charges, and maybe in a minute I'll tell you a little bit about what we're doing in the US, because yes. Even just starting our US business, I've seen how different the fee structures are, and they're all fixed and they're much lower than what we have in Australia. So it's not impossible for zero brokerage, but those providing zero brokerage will have to have multiple revenue streams covering all sorts of other products to be able to subsidise the cost structure that's in place. It can happen. There's also lots of different business models popping up. Everyone's business model is a little bit different. I think that there could be different prices relating to the different types of models that are being offered, and that's certainly you could see some models that are different to SelfWealth's model. They could go to a lower brokerage rate. That's not to say that we would want to follow that, because we believe in our model is giving a whole bunch of value to our clients. And what SelfWealth needs to do going forward, we need to get our international product launched, hopefully in the next 8 weeks. We need to have our brand new mobile app out in everyone's hands. That will also be pre-Christmas, and then we need to work with our good friends at Open Markets and our own IT department to increase the amount of functionality we have on our platform and the amount of products that we are able to distribute to our investors and to our clients to a point where those people can turn off those ComSec machines and hopefully you'll be able to do just about everything that you can there on SelfWealth, but at much more reasonable fees and charges.
I love in all the conversations we've had, it's always been the client has been at the center of the conversation. It's always about doing the right thing, for the client, which is very different to a lot of conversations that that are typically going on in financial services, which I think is remarkable and a massive testament that you haven't deviated from the core messages at all. But I won't go into that because I know that you are pressed for time. US is a major thing that you've been working on, and on your website, it actually had, that this is imminent. And obviously, from what I'm hearing from our conversations, that it's coming very close. Tell me about that. I mean, what are the motivations, and what does it look like?
Sure. The motivations come from the fact that our clients want to do it. More and more people, especially our demographic, who obviously very well versed in many of the US companies that they use for their day, everything they do in their daily life. They do want to own some of those stocks, and so to be able to buy US stocks, but also to be able to buy it from the same platform and have it very user friendly, be able to switch back and forward between your Australian dollar portfolio and your US dollar portfolio. That's what we were getting told in surveys to our client base. It was one of the key things that they were looking for. And also, Ivan, when we did surveys for people who started to register for SelfWealth and then didn't register, why didn't you complete registration? It was because, in many cases, it was because, we've just noticed you don't do international. So, so we think doing US equities will bring new people to us, but also for our existing clients, it's going to be exactly what they wanted. How is it going to look? And I think this really gives us an opportunity to just reinforce that what SelfWealth's all about. It's about trying to make investing easier and and less expensive. So we've looked at a package for our clients to be able to purchase US equities that has essentially three components. We haven't gone to zero brokerage. We're staying with our famous $9.50, although this time it'll be $9.50 US, not $9.50 Australian dollars. And I'll explain why we didn't go to zero. Secondly is the foreign exchange. When you're transferring money from Australian dollars into the US dollars, and when you're buying and selling US equities, you are definitely going to have you need foreign exchange transactions. So the spread that's offered on that FX transaction by your broker should be very important to an investor. And we've gone in partnership with Phillip Capital, who are our provider of the US equity product. They have their own FX operations as well. We've been able to get a very tight margin. So it's 60 basis points, and that's probably 30, 40 basis points better than many other competitors in the market. The third thing, which is really even more important, I think, and it's the reason why we didn't necessarily want to go to zero brokerage, is that on SelfWealth, if you buy US dollar equities, you'll have your Australian dollar portfolio. You'll switch your money from Australian dollars to US dollars into your US dollar wallet. That is when you'll incur that foreign exchange transaction, and SelfWealth will make some money off that. After that point in time, if you've moved $50,000 there, you might do 10 trades in the US. You will not be charged another FX. That's money is in your US dollar wallet. Now, some people do that as well. Some of our competitors do that, but many of our competitors actually force the client to do an FX transaction every time they trade. So if you think about it, Ivan, if you're selling Microsoft and buying Apple shares, you shouldn't have to go from US dollars to Australian dollars, then Australian dollars to US dollars. You're crossing those spreads, and that's just not
massive hidden cost.
It's a massive hidden cost. So in line with SelfWealth's objectives of making this fair for everyone, we've said, okay, we're going to give away some of that revenue of churning those FX trades. We'll only, when you move your money out of your US dollar wallet or into, that's when we'll get our FX. But therefore, because we're allowing you to do all of those US dollar trades without any foreign exchange linked to it, we need to earn some brokerage on that. So that's why we've stuck at the $9.50. That whole package works well.
Yeah, and it's been a long time in the making. Robert, there's a couple of questions for you. I know you've got to run to a board meeting. Can we keep you for another 5 minutes or so?
How about 2 or 3? Yeah, I'm chairing the meeting as well. So
yeah, okay, 2 or 3. Okay. US stocks are custodian based. I didn't know that. Will trust accounts be supported for US stocks?
Sorry, what's that?
Will trust accounts be supported for US stocks? Mike said I didn't know that US stocks are custodian based.
Yes, the whole US market is custodian based, and
as is most of the world.
When you look outside of Australia, you realise how many things we do here that are non-conventional.
Yeah, definitely, and some of it is for the better. Jeremy asked, any chance to allow USD deposits? So are you actually allowed to deposit US dollars into your SelfWealth account, or do you need to do it in Aussie dollars?
Yeah, you must have a SelfWealth domestic account. The reason for that is that's where we go through all the AML and electronic identity verification. So we do all that stuff, and you get your Australian dollar account, domestic account, and that allows you to do anything you want in the Australian market. Then you move money into your US dollar wallet from your Australian account, and that's because we need to at least get one FX transaction.
That makes sense. Well, that answered Bruce's question as well. Why a high FX conversion fee when doing US equities, which you've answered after that question was. Any chance, Venki asked, any chance of introducing options and derivatives on the platform for both US and Aussie equities?
Certainly for Australian equities, it's on our wish list. It's on our clients' wish list. I've been asking our clients to be patient until we, in terms of our product roadmap, we need to get international launch. We need to get the mobile app, the new one out. As soon as we do that, you and I, Ivan, will be talking turkey on options and how we can make that happen. And I would be upset if that didn't happen in 2021.
Yeah, as would I, because you know how much I love options. There was Lefing did ask a question around talk about the relationship between open markets and SelfWealth and how does open trader fit into it. But maybe I'll answer that really quickly. So SelfWealth is a client of open markets. Open markets is a clearing. It's effectively a stockbroker, and SelfWealth is our largest client. Rob, thank you so much for joining. I know you need to run off. So for everyone who I didn't ask the questions, hopefully you guys come back to the next time we have Rob on the show and get your chance to ask them. You should just do it a little bit earlier next time. Rob, it's been an absolute pleasure having you on the show, and good luck. And I know we'll be speaking early next week, and hopefully we'll have you in the setting maybe early in the next year as some new products get launched.
Yep, that'll be wonderful. Thank you for having me, Ivan. Thanks, everyone.
Thanks so much. Good luck on your board meeting.
Yep, good on. Thank you.
Bye.